Now, I know you've been told the economy is going to hell. Anyone, please talk to the folks at Visa. The card giant wants to go public to the tune of almost $20 billion. And someone, please talk to the management at Electronic Arts, quite willing to plunk down $2 billion smackers for an unsolicited bid, no less, for rival Take-Two Interactive Software. And by all means, someone talk to housing industry enthusiasts who point to a report today that hints maybe, just maybe, the worst of the housing mess is behind us. Now, I know all of these could prove false signals, but they're also pretty expensive bets. Folks betting big time with big money that at this big moment in time, there's a big opportunity to go against sentiment that is negative and a press that is even more negative. You don't have to search very far to see plenty of ammunition for that negative thinking. Financial stocks still under pressure, and General Motors, at least in the eyes of one brokerage house, likely to come under a lot more pressure. Economic turning points never come in nice, neat packages, my friends. But this kind of money in this kind of market leads me to believe that some are betting there will not always be this kind of opportunity. Now, I know a game maker, a credit card giant, and some suddenly lively housing stocks make a weird trio, but I find them a telling trio, telling me not that happy days are here again, but maybe, that the worst days are not. So, how do my colleagues feel about my connecting the dots, or pray tell, am I just a dolt? If they say the latter, they will never come on this show again. We got Jonathan Honig here, we got John Layfield here, we got Tracy Bynes here, and Peter Schiff. Jonathan Honig, to you first. What do you make of these developments?
Well, Neil, I mean, they're good signs, one and all, but I just don't think there's been a fundamental change in trend, because the biggest indicator, the one you actually didn't mention, that is the performance of the major stock indices, is still pretty negative. I mean, the Nasdaq's down 12%. I think once those red indicators start turning green, I'll be more likely to think that maybe a sustainable bottom's in place. All
right, but you'd wait until those averages are in the positive? Isn't it kind of late then to miss things?
Well, not necessarily, Neil. I mean, if the Dow's going to go up 2% of the year, it's probably going to go up 10%. And there was still so few stocks doing well. I mean, Take-Two was up, strongly today, but there's still so few stocks doing well. I'm hesitant to put a lot of money to work in this market.
John Layfield?
This isn't good news, this is neutral news. Look, there hadn't been a market securitization since last summer. That 60% of mortgages are owned by third parties. You've taken out 50% of mortgages. Banks don't have the extra to put this on their balance sheet. You have more sellers, a lot more sellers than you have buyers. Housing prices are going to come down, and Visa is simply a play on transactions, has nothing to do with the economy. It's a once-in-a-lifetime opportunity like MasterCard.
What do you think of that, Trace?
Well, I think Jonathan's sentiment is common to the traders out there. They don't want to put their money in the market, but I do think it's a tale of two economies. You have the financials and the home builders. We've had this for a while now. They're in their own little recession, and you have the rest of the world where balance sheets are actually still pretty good, pretty much evidenced by Visa and this Take-Two deal, that other things are going forward. Things are moving along. And I do think there's something to be said about the fact that Goldman might potentially report a bad quarter. You could argue that maybe we are coming to the bottom of this, that maybe everyone is shelling it all out and getting done, and that we have another couple months, I think, of it, but maybe we are coming out of this a little bit.
Peter Schiff, I know you're not in that camp, right?
Not at all. First of all, the fact that the insiders at Visa want to cash out isn't a good sign. I mean, maybe Wall Street can drum up demand for this stock, just like they did with Blackstone, and now that's less than half of what the IPO price was. But I think it's a bad bet if anybody wants to buy into Visa. Also, as far as the housing numbers are concerned...
What do you just think of the timing of Visa doing this, though, Peter? I mean, they could have picked their opportunities anywhere, right?
Well, they want to get out. They want to sell stock. If they tried to do this a year from now, they wouldn't get a fraction of what they're going to get today, because their revenues are going to dry up, even though they don't take the risk.
Well, they could have done it a year ago, right? The rumor was they were considering this a year ago when they could have gotten a lot more, right?
They probably should have, but you know what? Yeah. They're getting out while they can, because what's going to happen is all the banks that are extending credit are going to lose so much money on their credit card loans that they're going to have to reduce everybody's limits. And so the transactions that run through the Visa system are going to be dramatically reduced, and their earnings are going to collapse. And also the numbers that you see in the housing market.
That's not true, Peter. That's not true. They're showing revenue increases over the next couple of years. And as a matter of fact,
those are projections.
Between MasterCard and Visa, they are
those are
projected to have
Tracy.
55% of all credit card transactions. So so what? Those numbers
Tracy,
are not
you know what you're all missing here is very simple. Visa has worked on this for over a year. This has nothing to do with market timing. Exactly. This has to do with secular trends of people using credit cards. Has nothing to do with the credit industry. You are going at this completely the wrong way.
people's ability to use credit cards is going to diminish dramatically in the United States. You're missing that. You're missing that. The credit card industry is going to be in a slump.
You're missing the secular trend, Peter. This has
you're
nothing
missing
to
the
do
trend.
with the economy. This has something to do with processing fees. Has nothing to do with the economy. You're completely missing the boat.
Buy the stock and look where it is in a year from now. You're going to be very upset if you buy the stock.
Let me just step back to
the five-bagger.
Okay. Let me get a sense of Jonathan Honig from you. What would represent turning points to you? I think you said at the outset here, if you saw the market indices in positive territory, they're still a ways from there, but not too far. But what would be some of the things you would look for?
Well, and Neil, one bullish sign is the fact that, as you pointed out, a lot of people are bearish. I mean, downgrades stay for Fannie and Freddie and Washington Mutual. So the fact that, a lot of the analysts are turning bearish, and there's a heck of a lot of negative sentiment out there. People are listening to guys like Peter and pulling money out of stock mutual funds. That's an encouraging sign. But I guess, I look at 100 stocks every day. I would just like to see more stocks actually doing well, more sectors doing well, besides the commodity stocks, before really feeling like we have a secure bottom.
But again, stupid and simplistic market question, and this is jump ball for any of you here. You don't see that until it's too late, right? You would not have known after the '87 crash, when IBM was back in buying stock and GM was doing the same and GE was doing the same, that represented an inflectional turning point, right?
We've been in a bear market for 8 years now here. Why, people who have been jumping
Peter,
into
what do you mean we've been
in
a bear market for 8 years?
Yes, the market, look at the value of the U.S. dollar. Look at what's happened to the value of stocks. The Dow was down better than 70%
So, Peter, none
in the
of
last
this stuff
8 years.
you see, okay, Peter, I just want to be clear, none of this stuff you're seeing is encouraging to you.
No, I'm continuing to move money into commodities, like Jonathan says, into gold, into foreign assets, because we are in a major secular bear market in U.S.
if it's lasted 8 years on a dollar-adjusted kind of a basis, and that's an interesting way to look at it. All right, well, you're yelling at me, and I get scared when you do that.
So when you're living in inflationary times,
all right, stop. I'm asking you this. If it's 8 years, how much longer?
It could be another 8. It could be another 15. I don't know. We're in a lot of trouble.
Another 8, another 15.
No.
You would actually be middle-aged if it went that long.
We're in a lot of trouble.
I think you're going to see things turn around even as early as the summer.
How long have you been saying that?
Well, the summer's not here yet, Peter. Give me time.
Yeah, Mr. Schmutty Pants. It's not summer yet. Okay, so John Lakefield, what do you make of that?
You've got twice the amount of cash on corporate balance sheets, mainly large market cap. That's why you're seeing acquisitions. The housing market, this is not good numbers. These are neutral numbers. Overall, I'm bullish on the economy as it stands now because of the multinationals. Peter is on Pluto and completely wrong.
No, I'm not. You guys, if you look what's happening right now, look at the article in the New York Times on the inflation in the Arab world.
You got to have a little responsibility in what you say. That 8-year bull market is reckless and irresponsible to say that.
Wait a minute.
It's
not
just wrong.
Wait a minute. First of all, let me talk. The only person who's been coming on these shows who hasn't been reckless and irresponsible has been me. But if you go and look at what the New York Times...
Until you mentioned the New York Times, you were. But go ahead.
Well, look, there's an article about the incredible inflation right now in Saudi Arabia and the Middle East. People are suffering. The reason for this inflation is because their governments are printing all this money to buy up our dollars. They're propping up our currency, and their people are suffering. It's happening in China. This is going to end soon. And when these foreign governments stop buying all our dollars, the dollar falls through the floor, and prices in this country and interest rates are going to go to Pluto, where you think I'm living.
All right. Well, Peter, you always tell me this. Peter always says this at dinner time, and I know he's wants me to lose weight, and that's what he's doing. He affects my appetite. Guys, I want to thank you all. We'll explore this in more detail later. Well, they pay the most taxes, fund the lion's share of the programs, and yet to hear a lot of politicians tell it they're not paying enough or funding enough. Class warfare is nothing new, of course, in politics, but ripping a whole class of people like this is. Here's my worry, that we are lumping success with sinister. Now, I don't know if that's a good idea or longer term, a wise one. What do my panelists think? Let's ask Jonathan Honig, John Lakefield, Tracy Burns, and Peter Schiff. Peter, open season on rich guys like you. How do you feel about that?
Well, I don't know about me, but I agree with your sentiment. And unfortunately, I think it's going to get worse. I think, our country is in some very serious trouble. And one of the reasons it's going to get worse is the politicians are going to attempt to fix it. And, one of the ways they're going to fix it is by vilifying and taxing the rich and doling the money out to everybody else. But when you do that, you actually hurt the poor more than the rich, because the rich have one thing they can do. They can stop working. They can retire. They can lie on the beach. They don't have to earn money. They don't have to employ people. They don't have to produce products. They can retire and quit. And that's what's going to happen if we raise the tax rates up so high. And it's just going to be, it's another reason that I'm as bearish as I am.
Jonathan, what do you make of that?
Well, I mean, Neil, it's unbelievable. If any other group was vilified the way the rich are, I mean, they'd never allow it. I mean, if it was Southerners, if it was fatties, if it was Jews, if it was lefties, I mean, you would never stand for it. But for some reason, the rich are convenient whipping boys. I think most politicians believe that the rich get rich on the backs of the poor, and they see it as their job not to protect all Americans' rights, but to basically redistribute wealth from those who've earned it to those who haven't. It's not a moral idea, and as Peter pointed out, it's a terrible economic course of action.
Imagine if you were a fat lefty. I mean, man, you're really in big trouble. Tracy?
But to Jonathan's point, part of the reason that they're getting away with it is because there are a fair amount of rich people out there, Warren Buffett being one of them, that actually believes the rich should be taxed more.
Well, the super rich believe that. Those who have $1 gazillion believe that. But that's not typical, obviously.
No, it's not, and it's unfair. And I think what they're still missing is by raising the tax rates, they are killing the entrepreneurs, the small business people, because this trickles right down through their tax return. It raises the cost of everything for them. A big chunk of the new jobs that come out in this country come from small businesses, and raising taxes will kill that.
Well, John Layfield, I just had a top Clinton advisor here with me, a rich guy in his own right, and I really appreciate his honesty, but he apparently had tried to talk to Hillary Clinton about this vilifying the rich is not a long-term wise strategy. Class warfare is not a good strategy. Well, not everyone who's rich is evil. He kind of said it fell on deaf ears. What do you make of that?
Because she has to run on a populist message to get elected. Look, this is what Hugo Chavez got elected, and you see in a very extreme sense what happened to Venezuela with their market economy. This is a stupid redistribution of wealth. Look, when you have people who have made their own money, who have built their own companies, to go up to them and say, listen, we're going to take money from you basically because you're successful, very successful, and we're going to give it to these people who haven't done anything, who are on welfare rolls around the nation. It kills incentive. It is not what America's all about, and it will hurt our economy.
The problem is, Neil, is the environment is so ripe for this kind of rhetoric because the economy is really bad. And, the Fed has created so much inflation to try to prop up Wall Street and prop up the housing market that the cost of living for average Americans is going through the roof. And so they can barely afford to pay for their food, for energy. They're watching their home equity evaporate, and they're looking for villains. They're looking for someone to blame.
But again, I think it's all because it's an election year. It's all because it's an election year. If we were not in an election year, you would not be bashing the rich. We wouldn't be hearing all this, and this whole populist movement would be gone.
Well, I think they're going to keep bashing them after the election.
Yeah, I do think he's right about that, Tracy. I think they're going to keep this theme going. But go ahead, Jonathan.
Yeah, I mean, Neil, there's been a total shift in this country. We used to worship success. We used to respect people who are successful and accomplished. Now the politicians, they worship those who need. And they feel as the rest of us who actually work for a living, it's our responsibility to provide them for whatever their needs happen to be. And I just think, again, it's a very un-American idea. And I think it's just exactly the wrong course of action, both for this country and for this economy.
All right, but John Layfield, one of the reasons why I think it will continue is, and those who even get leery of this class warfare say, well, it's the rich's fault because the chasm has widened considerably. The CEO who used to make 30 times what his lowest paid worker did is making 300 times today, and reap what you sow. What do you think of that?
That's what the market bears. Look, I couldn't agree more with Peter about where the economy is headed, but I do agree about this redistribution of wealth being stupid. That's what the market bears. You have double the amount on cash balance sheets in corporate America since 2001. Jack Welch is worth a lot more than the guy down in the mailroom. I'm sorry. Yeah. You can try to redistribute that all you want. Yeah. That is the market, and it's a market working efficiently.
One of the big problems, though, is the inflation that the Fed has created over the years has redistributed wealth in the other direction, from working Americans to the financiers, to Wall Street. They've gotten rich spending all this, this new money, this easy credit that the Fed has pumped out. But that's why the cost of living is going up. Meanwhile, our manufacturing base is crumbling, and that's reducing the standards of living of working Americans.
Our manufacturing base is not crumbling. You're wrong
yes,
about
it
the
is.
numbers. No, you got to check the numbers. The manufacturing base is not going.
All right. Guys, we're going to take a quick break here. We'll talk about manufacturing base tomorrow. That's a good day. Tomorrow's a good day to talk about manufacturing. All right, well, she has been called the most